Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a fantastic day. We're taking a quick look here at Bitcoin, seeing what's going on, helping understand, again, best practice and big picture. So when it comes to Bitcoin, it's doing very well for itself. It's holding very strong here at this level of 51 to 52,000, even a range upwards of 53,000. We can see some pretty nasty manipulation candle wicks. So we're going to look at some back-end data too here and kind of see what's going on with this. This is heavier concentrations. Again, we looked at 47,000 and 50,000 on the larger time frame. So if we take a look here at the 7-day look back, just to quickly jump in here, we can kind of see once again those heavy concentrations at 47K and roughly 51,000. There's a strong, heavier accumulation here, about 50,400. That is newer. We haven't seen that recently until now. Also, heavy concentration at 53,100. Okay, so we're starting to see a lot more shorts entering the market above. This is again just the last 7-day look back. But generally speaking, what this tells us is with us being closer to 50,000, there's a possibility we see a little sweep down there. Okay. It doesn't mean that it's just going to go there and continue on lower, but generally speaking, liquidity levels are swept all the time. But here's the funny thing about this: if you take a look at the 12-hour time frame, we can see there's super massive, large amounts of shorts versus longs in the last 12 hours. So again, what do you think market mover is going to do to that? I think that's more likely to get swept to 52K first. But once more, we just got to be mindful. 50,000 is roughly a heavy concentration of long liquidation, and looks like 52,000, upwards of 53,000 is a secondary amount there. Okay, so with us being kind of smack dab right in the middle, that doesn't tell us a whole heck of a lot, but it does help us understand, generally speaking, the concentrated areas, which are key level supports and resistances, or what you feel is a key level support and resistance. Because again, if you put your stop loss right there at those levels, you're going to get swept. Okay, you want to ensure that you have a level just below or above that, depending on the direction you're heading. So just be mindful of that. That's kind of how that works. Quick congrats to our community members. Thanks again, everybody, for being very supportive. As you can tell, I've kind of got a little bit of a cold here, so I won't be doing a ton of analysis, but we took some nice profits here from AVAX. And yes, we have a couple of longs that are in the red. That's just kind of how it goes right now, folks. Again, Bitcoin looked like it wanted to continue to break out, got that false positive, the price breaks out shortly after taking those long positions and pulls right back. Okay, this is so normal, so common right now. All the more reason why we haven't gotten stopped out though is because we're not using high leverage. All right, so again, recognize that it's not the end of the world if the price fluctuates. The key takeaway here is that we've got a strong support at 51,000 and a strong resistance at basically 52, 53,000. Okay, so we're in that range. There's no other way around it. We are absolutely range bound here. But the truth is, closing 51,500 or higher today would be extremely important, just so we don't have this bearish engulfing candle specifically, and we can close somewhere in that previous range for the low. Okay, so let's talk about the bigger picture here. Obviously, the moving averages are still good. So I've discussed this with my community, how the macro is looking pretty strong for Bitcoin still. Okay, even though we do see some divergences and the MACD is forming. That may or may not happen, right? So again, don't trade on this specifically because that's just a series of moving averages letting us know the momentum is shifting. A lot of times that momentum can shift without the price action moving too, or at least moving too much. All right, so let's go ahead and let me clear this out here. And just to clarify, we got high money flow index and RSI under 70 or at 70 right now. So it's really common for the RSI at 70 to be tested multiple times, or in other words, for it to bounce. We could very well see the price continue upwards from here, right? So I guess is what I'm getting at. The key takeaway here is that this is a resistance level until it's not. So at this point here, we want this, or sorry, correction, I misspoke. That is a key level support until it's not. So if the price does end up closing below that today, we could experience further downside based on the simple fact that the RSI is tapering off and the price action is still maintaining itself. Again, you look at the history though, it's conflicting though. That's because it depends on how you look at it, right? Because we look at this history here, first of all, last time the RSI went up over 70 and stayed there, it was there for roughly about a full week. That's about a week's worth of trading. The price action did this here in that time frame. Okay, so up, manipulation wick, and the price inevitably continued sideways and up. So the truth is, even though the RSI being above 70 is a positive sign, kind of it's normal when you have these type of occurrences, right? It doesn't imply the price is just going to drop because the RSI comes back down. The price stays the same, the RSI continues lower. That's actually a very good sign because then it will tell us that the price action could inevitably bounce later. Once more, it just depends on how it moves around. But I guess the way to understand that is to to not really focus on that being a big deal right now. With us being over 70 on the RSI, that implies that this continuation is still running. But with it pulling back, though, there's no doubt that the price could pull back with it, right? So me, more so when I look at that, I think of that as a shift in momentum and a potential, something we need to kind of pay attention to and let us know that, hey, even though we got a lot of bullish qualities on the daily time frame, we're starting to see this shift in momentum on the back end, that momentous shift, and that very well could result in the price pulling back here. So I wouldn't be surprised the price does pull back based on that. But once more, we want to look at other things too, because that's not just, you don't just take the daily analysis and call it good, right? So let's look at the 4 hour and see what's going on. So with the 4 hour time frame, we can see a stochastic swing to the upside. Money flow index is fairly low at 20. You've heard me say this multiple times in the past, but commonly you'll see money flow index bouncing off of that level and continuing higher. Now, again, it's hard to give this perspective here with some of these examples just because this was kind of a resistance level there at 43,000. If you remember from before, everyone's calling a short and the price continued higher. That was a consideration right there because money flow index was very low, bouncing effectively, and then it continued higher inevitably. Okay. So what I'm getting at here is that low money flow index in general is typically a positive sign for reversal of the price action to continue in the opposite direction it's heading. Okay. Because again, if we look at the money flow index, ever since the 18th, roughly 3 days ago, the MFI has been below 50 and essentially going sideways and down. That implies that money's been flowing out of this coin this entire time, yet the price stays the same. Okay. So that implies to me that the bulls are gaining strength and the bears are losing strength because they can only sell so much. And with the simple fact of the matter is that the amount of money that's going in and out of this coin is insane. And at this point here, it makes more sense for the price to pivot and bounce a little bit here. It may not be super strong, but I would say that we should likely see the price retest the 52K range just based on that simple sentiment. Now, again, you got to recognize we're under 50 on the RSI. That's a bearish sign altogether. It implies we have a strong resistance now at 50 on the RSI, which is probably close to that 52K mark if the price were to pull back. So we need a lot more volume to be able to break through that resistance level too. So it's this constant battle between bulls and bears right now. But the fact of the matter is we're holding this level quite strong, quite well, and I think that's a positive sign. We can also see the MACD is diverging too, so by no means is this a bullish sign. Just letting you know that we have a shift in momentum and a low money flow index, leading me to believe that we could see a pivot and a bounce from here. But once more, we're not overextended by any stretch. We're in a situation where the price should and will likely continue in the same direction here. So, and that's where we got conflicting information. We take a look at the hourly here. First of all, we're below all moving averages, so that's not great. But to double check here, we are seeing this falling wedge pattern here. In other words, with the price action retest these lows here, consistently establishing lower highs and lower lows when you think about it. The reason why these break out is because it consistently retests this upper range here. And once you break a trend line, you either become range bound or in an ascending trend. So what we're looking for here is for the price action to break this trend line and to continue higher, of course. Is it guaranteed? No, but generally speaking, these wedge patterns do have a higher tendency of breaking to the upside because it's coming down, right? So again, it's a bit of a stretch. I try not to attach myself to trading specific patterns like this, for example, because I don't think it's wise to do that. But I can say though that generally speaking, this is not the worst thing ever. This is actually a positive contributing factor in a way. We take a look at the Ichimoku cloud though. We're still confirming bearish signs here. Lagging span is intersecting with the price action, but still kind of free and clear. So we won't really have a long confirming factor for at least 24 to 48 hours. And again, cloud being above the price action, not great. Once more, this is range-bound activity, so the cloud can be very inconsistent in range-bound scenarios, so I don't really think this is a super big deal, but the general consensus here is that no one really knows what's going to happen next. All that build up for what, right? Because you can speculate in a whole lot of different time frames. To me, the fact of the matter is the price has held this level a lot longer than it should have. And with all the attempts to break down, the price has retested this upper range a lot more times than it has this lower range. So it seems to me that the price is going to break more so upwards than downwards. But once more, it's going to take some time, right? We need to establish more volume at this level. But there is a tremendous amount of volume at this level, and we can see, that point there at about 51,800 to 51,500 is a close approximate. Those daily candlestick closures. That would be a level we want to close above today to be able to have confidence in knowing the price is going to stay where it's at. If we close below 51,500 today, I think we have more propensity for the downside. That's kind of just the overall sense there. All the other things we looked at are, I guess, purely speculative. But to me, a low money flow index in the 4-hour leads me to believe we're going to see the price action at least slightly recover here in the immediate future. But how hard of a recovery is that? We truly don't know. Okay, only the market movers know, folks. And obviously, you wouldn't be watching this if you knew too, right? So hopefully, you can learn and consistently understand where I'm coming from here. Thanks again for watching. I know it's a bit of a ramble bus here today, but I appreciate the support. And thanks again, everyone. Hopefully, we can have some clarity here soon. But again, if you're concerned about a long position right now, I totally get it. It's a pretty red market right now, and most coins are responding poorly to Bitcoin being on the edge of disaster, right? So it might be advantageous to consider closing some of your positions if you have longs open, just be on the safe side. And I would just say wait it out. Again, it's okay to do that. I don't feel bad about having a couple of longs open right now. They're kind of longer term plays. We do have a tighter one with Atom, of course. We need to maybe adjust or consider closing. But when it comes to like XRP and any other long positions we have from before, I don't see a problem with leaving them open. We've taken majority of profits on those. And the same thing with our shorts too. We took a nice profit on our Bitcoin short, which is still technically open. And then same thing as well with Avalanche. We've hit a couple of our targets there too. So again, we've hedged our longs with some shorts, so nobody should be in dire straits right now at all. We've taken profit on most of those coins. So at this point, I would just say be patient. If you're concerned at all, consider closing your position because there's slightly more bearish signs than bullish signs. But ultimately, right now, it's a flip of a coin. Because every time the price comes down to 51,000, it recovers. But every time we get up to that 52.5 mark, the price pulls back. So range-bound activity is exactly that. You buy the bottom and sell the top until it proves otherwise. Okay, so that's kind of where we're at now. In this situation right now, hypothetically, you should long at 51.1 based on the simple fact that it's always recovered every time it's tried to break down. Right? Again, just different strokes for different folks. But if you're going to trade right now, low leverage, low position size, please, folks. Our community is learning and benefiting greatly. Like we got some traders here, started to use 5x. I feel much better with no stress in my trades. There's no doubt about that. That's the way it goes, folks. I don't really feel concerned about my trades either because I just know that in general, if the price breaks up or down, I'm still going to be able to survive those little ebbs and flows, not be like super stressed that I took a 50x leverage trade, right? Don't do that. Anyways, conversation for another day. Thanks again for watching. Hope you learned something here today. If you want to become a better trader, CryptoCash.tech is a site. We got a lot of new members. Welcome aboard. Please make sure you read through our signals guide in our Discord. It looks a little something like this, where I just kind of describe and explain the difference between my Premium Plus and my Premium Signal trades. Okay? All right, folks. Thanks again for watching. We'll see you in the next one. Take care.